Tushar Pradhan is our next guest on the show. He's joining in to give us his views on how things are stacking up right now. Tushar, great to have you on. Thanks for joining in. And you're joining us in your new avatar, director at HXGON Partners. So welcome to the show in that new avatar. So what have you made of things and this broader market consolidation and cool-off that we've had? I think even now, if we see the screen, for instance, today, it's still the larger mid-caps which are finding takers. Do you think the worst of the shakeout is behind us, or are you expecting more ranging action beyond the Nifty?
No, I think this time it is probably going to be something which is a protracted volatility era. I don't think we're going to settle at any level. Since we've had a significant up move throughout the last year, and clearly there are pockets of over enthusiasm in mid caps and small caps, I think the market is going to take a long time before it can settle down, because I think wherever the market finds some kind of balance, it is always a rational PE that it will trade at. And there will be many times where such a rational PE will take some time to come, because the earnings have to catch up. And once the consistency of the earnings is settled, I think that's the only time that you'll see the market, which is slightly much more less volatile than what we see now. But my prediction is that this year is going to be volatile. There will be news-led, upsurges and drops, and sometimes pretty sudden drops as well. So be ready for some volatility.
How would you construct your portfolio to tide over this volatility? Tushar, hi, afternoon.
I think the best way to secure yourself in a volatile market is probably go towards quality. So whether it is large cap, whether it is quality mid cap, or something that you truly believe in terms of the valuation comfort, even in a small cap. So I don't have any specific choices between large and mid cap, but I think quality per se will clearly be a lot better to hold on to during such periods. There is also a lot of froth around the expectation of explosive earnings. And any disappointment, whether it's on a quarterly basis or even on a more structural basis, is likely to lead to disappointment. So I think one should construct a portfolio being assured of the kind of consistency that they see in the earnings growth of the companies within that, rather than just taking a chance on whether you'll be safer in a large cap or a mid cap. I think the quality of earnings really is the one thing to look at.
Which are the sectors which are most susceptible to a earnings disappointment? You spoke about froth in terms of earnings expectation. Where might we see some sort of a earnings downgrade, and therefore those would be the sectors, themes that you would keep away from, avoid?
Yeah, I think it's always nice to kind of bracket everything by sector, but I think there is a certain amount of overvaluation across the board. So even within a sector, you will find certain companies trading at multiples above 70 times or even 60 times. And in the same sector, you'll find certain companies trade at between 30 times to 20 times. So I think the real issue here is not an absolute valuation, but the expectation at which these valuations are trading at, and to double check whether those exist. I think in terms of the defense companies, we've seen a significant amount of overvaluation there. Of course, the orders are there, but as usual, the defense companies' cycles tend to be multi-year. So maybe some of that has already been priced in some of the prices that we see today. That's one sector that comes to mind. But again, mind you, I'm not saying that unilaterally to every company within that sector. I think there are reasons to kind of be selective. There are other pockets of overvaluation where I worry about, especially in the real estate sector. And also in some cases, I would say even in the NBFC sector. So I think given all of these, again, as I say, making a blanket statement might be dangerous. So one has to look at individual valuations and then decide for oneself that, yes, this is an expensive stock. How much do I believe the growth story to be, and whether I'd be comfortable with the valuation?
Hi Tushar, good afternoon. Good to see you in. Tushar, what's your view on tech? Accenture came out with a bit of a howler, and the street was disappointed. But actually, the stocks from the lows that we saw on Friday did see some bit of recovery. The problem is that some part of the street was factoring in an uptake in discretionary spends, which would be good for the likes of LTI, Mindtree, good for Infosys, Wipro, which may not happen. How would you approach them?
No, IT, I think, is since it's very linked to the United States and its economy and what happens to the election year that we are going to see, and what are the issues regarding immigration, which is one of the burning issues for the election this year. I think all of that seems to be tied up in some way to the valuations in IT, because clearly, I think the happy story about how Indian IT services companies made their inroads into the US by having a very large number of people who were to be hired and then placed in the US for their services delivery. I think that picture is a little bit under some cloud given the constraint around immigration and the policies therein. There is the possibility of a soft landing in the US, which means that if there is any situation where they believe that demand may not be that strong, it may have an impact on the IT budgets for most of the larger companies going forward. However, on the balance, you have AI and all of that associated technology era where they are not going to be hemmed in by any industrial slowdown or, for that matter, any immigration policy at all. So we are looking at a very interesting picture where we are unsure about which company is going to take advantage of the vectors of growth as we see from here. It is not going to be the same market that we saw in the past few years. So what got us here in terms of where the valuations for most of these companies have come from is not going to take us forward. So it's going to be very, very selective. And I think, to be fair, I think most of the environment is not yet clear in terms of who will be the winners at this time. I would think a more diversified approach to having an exposure to IT across the board would be a safer bet.
Okay, so more diversified approach to IT. Tushar, what about the overall market and your overall portfolio construct? It's also true that this market has had a one-way move from 2020 onwards, and you just mentioned that you're expecting more volatility. It's unlikely to be that straight parabolic one-way rise. So in that context, what are your top, at least thematic or sectoral overweights?
I think it's very clear that we are going to have a manufacturing revival in this country. So anything related to broad markets, which possibly include infrastructure, main infrastructure, as in even roads, etc. But if I expand that into general manufacturing, I think there is a reason to kind of get invested in companies which manufacture hardware, electric systems, power systems. I mean, it's a very broad range. Not very exciting, not something that a lot of investors have looked at recently because the more exciting sectors seem to be away from these. But I think those are the more stable, I would say, parts of the economy where the earnings growth seems to be fairly secure. One has to be a little bit more diversified. So I would include one of my favorite sectors, which is the financials. But again, within the financials, there is such a choice that one kind of gets confused, and they tend to believe that it's only the banks and the NBFCs. But I think beyond the banks and the NBFCs, there are some very interesting companies, especially in the insurance sector, the life part especially, as well as some of these very interesting fintech companies, which at some point of time will become pretty large in the universe. So I think, again, the emphasis I want to keep is that while some of the more traditional sectors and companies are likely to do well in the next 1 year or so, also keep a lookout for these non-traditional kind of companies which may surprise us by building generation of earnings in the next 1 or 2 years. So it's quite an eclectic choice. I think the standard norms of saying, okay, which sector now may not apply. I think we may need to put a lot of brains behind trying to find the next new winners from now on.
Okay. All right, Tushar, we'll leave it on that note for today. Thank you very much for joining in and giving us your perspective on the market. By the way, those